Creating a successful fintech is super tough. I've been fortunate enough to be part of the journey for 2 fintech unicorns, and I've become obsessed with cracking the code. Join me and my guests, all experts in their domain, as we attempt to find the secrets and share them with you. Welcome to the Hive Mind.
We're back in the studio for my next guest, CEO Joy Abisaab of MAST. One of the hardest journeys that happens in fintech is going from 0 to 1. Securing those first customers is a really difficult thing, and getting that confidence from the market. Joy's been on that journey, and that's going to be the focus of our conversation today. Joy, thanks for joining us.
Thanks for having me, James.
So many founders, when they start a business, know the problem that they want to solve before they start. It's like a burning thing, an itch they've got to scratch. But from our conversations, that wasn't how you incepted MAST. You went on search for a problem. Can you tell us about that?
Yeah, it's a very interesting founding story. So I met my 2 co-founders, Rob and Henry, as part of an accelerator program, actually, called Antler. And initially when I joined, I had a different idea. I wanted to solve more of a wealth management, capital markets kind of problem due to my background. I come from, over a decade of trading equities and derivatives, etc. But I've always been exposed with banking software and technology and capital markets. And when I discussed the initial problem with Rob and Henry, for me, it was bonkers that this was not really solved in the retail and commercial space. So we reverse engineered the problem. We started from a borrower's problem, right? Whether you're a portfolio landlord or you're a private borrower, you want to go get a mortgage. Even if you have the easiest case, it will take you a few weeks to get it. It didn't make any sense to us in 2020, back in the times when we started the business. When it's all about the stakeholders having the right access to the right verified information, you can technically give a loan directly, but it takes a few weeks. So for us, all of this is basically inefficiency trapped somewhere. So when we reversed engineered the problem and we went back to the root cause, we arrived on loan origination infrastructure. So we thought that the ways lenders decide on how to issue mortgages was very old, where it was based on manual principle, just digitized. It didn't make any sense. We had to re-platform. So we thought the problem was really big and we wanted to solve it. And we had the right founding skill set to solve this. And we started the journey.
So what was the moment when you were doing your market research and you thought, oh my God, there's some white space here. There's a problem people haven't solved.
Yeah. So we look at what we're doing as we didn't create a new market. We didn't create a new category, but what we like to look at it as in, we're building an iPhone in a world of Nokia and Ericsson's. And basically, everyone has loan origination infrastructure. All the banks have that. We basically started a company literally 2 weeks after COVID. So this was a bit of a silver lining situation because all the bank execs were at home. They had time. They were like, let's talk to startups. Why not? Which we think we would have had a much harder time if it was a normal times. And luckily to us, we spoke to a lot of very influential people in the sector without knowing it at the time. And I was shocked. I was a bit shocked of how much of a pain it was for people. But also I was shocked that no one's really doing anything about it. I learned the lesson through the journey after I understood that it's less of a tech problem and more of a political, legal transformation problem, really, in general. And we thought that, okay, well, we have to actually solve it. We had the drive, we had the wedge that that made us different, that we wanted to solve, and we started from trying to simplify things as much as possible and going from there. So always going principle first.
And you said you met your co-founders at an accelerator. Can you tell us about that experience?
Yeah, it was. So I co-founded a previous business before MAST, and my main mistake at the time was I didn't get a CTO that had the same skin in the game as me to build the technology business, software as a service business. Even though I'm technical, I know I'm not the right person to take calls on architecture and all this sort of stuff. I have my opinions, but I know some people are much better than me at this. So I needed to find a co-founder. And it was very hard for me to do it. So I thought, okay, let's join one of these programs and see if someone will align on the business we want to build, on the problem we want to solve, and also on the values we want to create in the business. So it was really, when I joined it, I was ready to leave it without a co-founder, because you see a lot of people joining these accelerators where, they just partner for the sake of partnering, when in reality, in the worst case scenarios, you work somewhere 3-6 months. In the best case scenario, you go through hell for 10 years, because nothing is easy, and all the problems, or all the challenges start after the accelerator. So it's a bit like a marriage, and I think this was luck. I found, the meeting my co-founders was the luck part, I would say. And then everything else we built from there.
Because you don't have just one, you've got two co-founders. So you were looking for one and you ended up coming away with two.
Yeah, the thing is, let's be honest, starting business is very hard, whatever it is. It doesn't matter what sector. And being 3 people at the start on a harder problem gives us more chance to get to the 1 or the 2 or the 3. And we're still the same team today, 4.5 years after. We're evolving into the next phase of growth of our business. But building banking software requires a lot of different skill set and focus. And in particular, in our case, we're selling to enterprise. And I think one of the main challenges we've had as a business is we go from zero to enterprise direct. And most of the business selling to B2B software, they go through the B2B, through the kind of SMB space. You can make software, you can try it out, you can do pilots. It doesn't work like this with banking. You have to build all the security infrastructure from day one. You need to remove all the hurdles to go through procurement of a bank, all this sort of stuff. So it made sense for us to split the business role into 2.
You highlight something I think really interesting regarding financial services, that it's not an easy market to crack into if you're in e-commerce. The industry is more risk tolerant. They're willing to take a punt on new companies, and that bar for entry technologically and from security is less. How did you go about persuading your first customer to join you when you're 3 guys in a new company?
I think it's a combination of a couple of things. It's part perseverance and part ignorance and part luck. We started this with the idea, we looked at it only from a product perspective. We thought that it didn't make sense that banks and lenders didn't have more modern technology. And the more we went through it, we went through the research and the scouting for finding a first customer, the more we realized actually the hurdles that we needed to go through. Going back to what I said earlier, we're a first principles company. So when we started business, we said, okay, if we want to become a loan origination infrastructure, an all-in-one platform for the banks, we need to start somewhere. What's the thinnest tranche of product that we can build that's going to actually make an impact on one of our biggest KPIs, which is speed? MAST, everything we do is based around speed of velocity of engineering, speed basically of processing. Everything we're trying to do is to speed up every aspect of the process. And we thought, okay, what's the thinnest tranche of product that a bank or a lender could buy or use from us that's going to make an impact on their underwriting speed? And also, which we discovered at the end, we needed to find a customer that had nothing to lose by trying it. And this is basically, looking for a needle in a haystack, basically. It took us a year, it took us nearly 15 months to find our first customer from the moment we started the company. While we were building and making educated guesses on the product, which is the worst way to build product, actually, because you want feedback, you want to have this iteration, and we can cover this later. We took a lot of educated guesses that end up being right, most of them, and we just scouted the market. And our first customer, we spoke to them for a year before they actually said, okay, let's try it. And when they said, let's try it, they tried it on a subsidiary that was paper-based, where basically they had nothing to lose. They said, okay, we're in a worst case scenario, we still can process things on paper. And best case scenario, we implemented a system that actually speed all the underwriting.
And that process of, I suppose, going to market or selling them, when you're already at scale, the allocation of capital, you've got a certain amount of money, and if there are 10 things that you want to do, you can do 5. But it's difficult as a founding team because you might be able to do 1, sales or marketing or channel. Tell us, how did you find that first customer, and particularly on that 0 to 1 journey?
It's all prioritization. Like sorry to rephrase. We basically went live with the broker portal. The UK market is mostly intermediated. So you needed to target where volume basically, where most of the volume is basically. And what we've done is we've built the minimum possible. And I think this is still one of the most complex areas we currently face, is always around prioritization. You know, what do you do with the resources you have? What feature do you build that unlocks the most value for your customers, but also that enables your business to move forward, right? So you need to take all these into consideration. We found our first customer through LinkedIn, but LinkedIn became a relationship that we had for over 12 months with them until they said, okay, let's try it. And throughout this, we were actually listening to their feedback, because we were basically showcasing our product, asking for feedback, and basically they were looking at their feedback being implemented over that time in the product. So this is where we realized, okay, they realized probably, okay, actually MAST is listening. We have nothing to lose by trying them on this subsidiary. Let's go for it. And in the meantime, we had to go through the hurdles of, increasing our headcount. We're still 3 people at the time, right? And this was the weird part, the interesting part, I think, or the unique part for MAST, is that we started very small and we iterated. And it's a sector where you don't really see startups. Most of the companies are either public listed or PE backed. The loan origination product is another product of a, full suite of different products. So for us, this is our, core of our business. So we needed to iterate on that, and it forces us to focus. There's a lot of features we hear from people. We would like this, we would like that. But do they really need it? I think most of the time they don't. There's things they absolutely need, but sometimes people like to talk and say, we want this, but do you actually want it? And for us, ruthless prioritization, given the limited resources we have and had to build this sort of software, forces us to build a better product. You don't need, if you look at all loan origination software, and to be frank, we haven't seen much. We're not trying to look at or trying to do what things have done in the past. But what we hear about is everything is very complicated. You have a lot of things. There's a lot of features that are built. We just don't do that. We're going through the pain of asking clients and do you actually need it? What's the problem you're trying to solve? Like, we're not trying to do things the same way you've done in the past. Let's go from a problem first, and then let's try and find a solution by seeing how we can apply tech instead of just mimicking what was done in the past, because or else we're not changing things, right?
You highlighted an interesting thing about people asking for tons of features that they don't really need, and the courage to challenge that. And that's something banks love to do, is they come to you with a set of requirements saying, this is how we did it 30 years ago. Can you put it in the cloud? So it takes a lot of discipline to push back on that.
You have to, because I think this is one of the main challenges we faced at MAST is, how do we balance short-term requests with long-term objectives of the company that aligns actually with the banks, but they just don't see it yet. If you look at all the established competitors or the established players, in a way they become the victim of their own success, because they get a lot of clients, but they end up building multiple different versions of the platform to have less resistance in saying no to each client. So they end up building a very customized, tailor-made solution that work really well for each customer. The flip side of this as a software supplier is you just can't innovate anymore, right? You have to maintain 10s, 20, 40, 30 different versions. So now every time you need to run a new feature, then testing will break. And even some things you can't even just do anymore, because you forked out certain versions of your product. Thing we want to avoid from the beginning at MAST, we said since we started, we want one source code. And we're never going to strategically budge from that, because this is how we will be able to innovate at scale.
Building software, accumulation of features over time inevitably ends up in things that are bloated, and that's how legacy becomes legacy. And I think one of the things people don't talk about is, adding features has direct tension with keeping something elegant. One of my favorite words is elegant, kind of beautiful in its simplicity. So Yeah, I think that's a battle that you'll face going forward for a long time.
Yeah, all the time. And then we have a good ethos at MAST into also removing things as well. This is a bit of a challenge. Some clients want certain things, and they will maybe even contractually ask us to make sure we have them. We push for a lot of things, but at the same cadence we add things, we remove things, because certain things just don't make sense if they're done differently in the platform. And we have this philosophy in the company, even in us as a business, we try to remove things at the same velocity as we add things, because the more you add things, the more you have to maintain them. And this is something people forget. You add a feature, it's not, oh, we've done it, but you have to maintain it now. So it becomes cumulative. So you need to remove things as well, especially if they don't add any more value. So that mentality needs to stay in the same way.
Just coming back to something that you said around your first customer coming from LinkedIn. I'm sorry, as a sales guy, I've got to poke a little bit more at that. Like, how do you mean? Was that through content? Because the hardest thing, those sales cycles that you described to 12 months, they're common for everyone. But the hardest thing for young companies is getting in the door in the first place and having that conversation.
Yeah, I would love to give you a sexy answer, but the reality is it's just hustle. Like me and my co-founder, Rob, we went through every lender's employees, LinkedIn, understood and made a list of thousands of people we should reach out, and we just did it one by one. And then it was just a lot, and perseverance and luck element that opened the door. It's not a piece of content, it's anything. We have to go one by one and just see who's willing to talk to us, who's willing to give us feedback. At the time, we're looking for feedback. We were not looking to sell, right? Because we just started, we're building something. We didn't know if we're going the right direction or not. It ended up being correct. Our educated guess, but it was just sheer perseverance and luck, to be honest. So we tried to reach to thousands of people in the industry, from the most junior underwriter to the largest CEO. And you would be surprised how many actually people would give you the time if you ask the right way. If you ask for advice, people help out. And at the time, we didn't even have MAST as a company. It was just a project of research when we were looking. So it was very interesting when you really put your mind into saying, okay, I'm going to do the hard bits to actually try and do something, and how things get unlocked in a serendipity kind of way. Yeah.
I really hope you're enjoying this episode of Hivemind. If you do, and you're watching it on the website, subscribe to our mailing list. And if you're watching on YouTube, there should be a little drop down so you can subscribe with one link.
Great. I mean, what you're describing is typical direct sales. I think that's amazing. And it shows, there's a lot of content out there that's suggesting that direct sales isn't effective anymore. You've just completely disproven that.
No, I think direct sales, if you're sending the right message, is actually the best way of doing it. It's expensive, but in B2B enterprise, it's not that expensive in a way, because, you can reach out to people. You can make a list of all the people in the industry and reach them out. It's actually a finite number in a certain vertical. Whereas if you're talking to consumer, it's very different, because, you're talking to a faceless client. Whereas here, at least us, you need to be very precise. We're operating now in the UK market with the eye of expanding, but that's it. Our landscape we could have laid it out, and we just have to go through it and make it happen. And also, the good thing, I think what's good is if you're sending the right message, your message gets amplified by people reaching out to other people and saying, hey, have you spoken to MAST? They're doing some cool stuff or not, or etc. So if you do this the right way, then actually it works in your favor. We didn't spend much marketing since we started MAST. It's been pure sheer of relationship building and we've been trying to build our brand on our promises and our track record and our execution, basically. And we hope that, this early traction is going to help us unlock the next one. And of course, we're going to do marketing. We're going to do everything, but we want to do things the right way as well. It does matter in a certain way. It does matter how you do things under the hood, like how you approach details, because it takes a very long time to build a reputation. And I don't want to say this, but it's the loan origination space, all suppliers, and it's a very hard, when you come and you speak to CEOs and you say, oh, you do loan origination, It's not like, oh yes, that's great. I'm very excited to speak to you. So it's a sector that's been also hard to penetrate and come and give a new flavor. And we want to try and give a new breath of fresh air in the industry, if that makes sense.
It does, yeah. But brand is a really interesting subject because your brand is known in the market as being you deliver when you say you will. And that's actually very rare. And it reminds that the brand isn't just something visual. It's not a snazzy logo, although I might say that I do love MAST branding. On the visual aspect of it, you said that when you started, you hadn't even created the name or, all of that branding. How did you do the visual branding? How did you come across the name?
Then it took us a while to find the name. It took us maybe 3-4 months to find the name. The first iteration of the name, I think Rob, my co-founder, had it was Crocodile, and then we dropped it. It was not Crocodile. I can't remember what it was, but the real first name of MAST was Catalyst with a K. That was absolutely vetoed by my other co-founder, Henry. And I completely agree with him. I don't know why we were thinking at the time. So we had no name for 3 months, and we had the placeholder, and we didn't register the company because we couldn't find the name. And then we eventually did a lot of research. We're looking at parts of vehicles or things that were driving or had something to do with speed, but that was not too geared to cars or whatever. And we ended up falling on the name Tiller. We liked it. Tiller, it steers the ship, it does that, but we realized that there was a fintech company in the US called Tiller. So this kind of lowered our hopes again. And we were like, okay, let's look at some other stuff. And we're like, what other parts of a ship drive the ship forward are important? And then MAST, the main sail of a ship, was available. And when I say available, I mean the domain name, no one in the industry was called MAST, etc. And we're like, and it clicked, right? It clicked. There was 4-letter word. It made sense. We liked it. And when it felt right for the three of us, we said, okay, that's it. We've looked enough. We had probably like 200 names that we went through, and we said, okay, let's settle for that. And we adopted the MAST name. And then the logo, how it came back, I think Henry did it in 20 minutes. He chose a font, he added it, and then it was like, it felt right. It was simple. We didn't need to do anything with it. And then what I did is I did the short version of it, which I took DM and I cut it. And that was it. We saved ourselves $200K in branding agency.
You did, but you wouldn't know that you hadn't spent $200K. It looks great.
Yeah. So for us, we wanted to keep it simple because we knew at some point you would upgrade the branding, you would do work, but we said, okay, we want something clean and simple. It worked. It felt right. And we did that.
Bullseye. So I just want to talk about hiring now, because when we've talked in the past, obviously building the team beyond your founders, the roles that you hire have a huge amount of impact on your success. And one of the things that you've done that I know a lot of other founders are doing are hiring people to amplify your capacity. And you've hired someone that you describe as a founder associate. Can you talk to us about that role?
Yeah, that's interesting. So everyone at MAST except myself and now the founder associate until now is product and engineering. So it's a very technical environment. Engineering and product is always a very big limitation factor in what we're doing. So obviously these are the first roles we're building. My view on things is that when you're a small startup, you want very good generalists. So we did that on the engineering side. We did that on the product side. So we have very good generalists. It's still a very founder-led sales company. It's myself and Rob, my co-founder, who manage that. And we needed, obviously, if you only have engineering and product, you need someone to do other things. Like I do the legal, I do the finance, I do the operations, I do all the stuff that people think that someone's doing in a business. I'm the one mainly doing it with the help of my co-founders, but mainly me, because I'm trying to remove all this pressure for them so that they can focus on building the product. I needed a generalist person to come and help me on all sides of the business, sales, marketing, ops. And I didn't want to hire a marketing manager I wanted someone who was eager to work in a startup and wanted to do a bit of everything and is hungry and do that and focus on the business side. So I opted for that and it was the right decision.
I mean, the name founder associate is more than an assistant, isn't it?
It's not an assistant, but it's definitely not an assistant. Founder associate is a very bright individual who can do everything. Usually the founder associate role is a stepping stone to do something else later. Typically, a founder associate role will either become junior chief of staff, or if they do like enterprise sales, they end up going enterprise sales or going marketing, or end up doing operations and people. Some of them end up becoming the chief of staff, become COOs after. There are multiple routes, and a founder associate usually is someone who comes from banking or consulting, bright individuals who wants to move in the startup world, but they don't really have a role that's based on their past career. Like if you've done investment banking and you've done derivatives pricing, how do you sell that skill set to a founder who's looking to hire something in product? You don't, but these people can absolutely do it, right? They just need this transition, and they're usually more on the junior side. So yeah, so that's basically the definition of a founder associate.
Incredibly smart, young, and versatile.
Versatile is very important. So this is why I'm saying it's not an assistant, because, I do assistant. I assist myself, right? So, and this is not, I would say I wouldn't tie this to a role, but you need to be a self-starter when you work in a startup. If you work in a startup with less than 15 people, what you do makes an impact, right? You're 15% of what the startup's output. So you need people who can do things by themselves. They're not shy away of doing any task that needs to get done. So yeah, so I think, no task is beneath anyone in a startup. And I think you need people who understand that mentality. We all do everything. So yeah.
Brilliant. And fundraising, like this is obviously a key part of the journey for many businesses. What can you tell us about the fundraising journey for MAST?
It's very hard. I mean, I think it's very rare you'll see a founder tell you it's very easy. I think for us, the challenge has always been around the area we are in, the vertical we are in. It's not typically an area that VCs or venture capital like, at least in the earlier stages, because it's historically been very hard to sell to banks and lenders. It requires capital for you to make it. It's very deal-based. So for us, it was very challenging. It was always iteration, but we were lucky in a way that we have very solid investors. A lot of them understand the sector or have built very big businesses in the sector and adjacent sector. And we iterated from this. And I think for us, I have to say it, like, it would have been easier if we built in the US. Europe is much more conservative. And risk-taking and everything. This also forces us to prioritize and be much more leaner and have better metrics as a company, because we can't get bloated too easily. We had to do the bare minimum to get to the next step, So it forces ultra focus, which means that we don't do everything, but probably if we keep going like this at scale, we'll have very solid metrics, and we have the right culture. I think having frugal culture is very important.
I mean, you talk about how difficult it is. And I think one of the things first-time founders are often surprised by is not just the difficulty, but the amount of time that it takes to continually court that world. Was that something that surprised you initially?
No, I mean, I come from the investment world. I've dealt with this in the past. Raising funding for a startup is much harder than raising institutional funding for, investment firm. But I always thought it would be hard, but sometimes I would thought it would be easier in some cases. It's a bit harder than I think. It was never easy, I think. And now I've always think that it's hard to fundraise. Given the macro environment, also, you don't forget that you're always competing with the hottest new shiny thing. Right? And a lot of the VCs are trend followers. So they will all do the same thing. They'll all invest in the same areas. They all need validation. It's very rare to have contrarian saying, okay, we're going to, and be very independent, which is very different from my old world. I come from the public market investing, where you want to be contrarian. In the VC world, I haven't yet seen very contrarian VC. It's very rare. So you need to compete for that, right? As well. You need to compete for that allocation, and people are not very patient. It's weird when I say this, because yes, you want to get growth momentum. You want to double, triple, double, do all this sort of stuff to become a unicorn. But sometimes the starting point, you need to get to the starting point of that with the right funding, and it's always the chicken and egg scenario, right? So yeah, you see this mentality more in the US than here, especially in enterprise.
One of my earlier guests, Ivan Mariuson from Monite, made the same observation. From funding in the US, they're a lot more happy that you try crazy things, and if it doesn't work out and you have to pivot, it's okay.
Yeah, I think it's not only a risk of mentality. I think it's the whole system. Like I'll echo a few founders have been speaking a lot about this in the last month or two, but we need to fix our public markets. There's a reason you don't see some of the big successes listing in the UK, right? But all this is tied to what I'm saying right now, because if you have recycling of capital happening at the highest level at the growth stage, and you have pension reinvesting, and you have people making money and reinvesting in the system, people will take more risks. But because we don't have that, we feel this all the way up to the early stage, because the people who make it, the capital is not properly recycled, or they can't get the liquidity out. So the problem is, in the UK, the mentality is you grow a business, then you have to sell to an American company or go to the US. Why are we doing this? Why aren't we solving this system? And it's not political. It's mechanics. It's growth mechanics. Whether you're, from left or right, it doesn't matter. There are triggers and incentives in place we need to put in the markets to incentivize, to basically unlock this air that doesn't move at the growth stage, so that it basically echoes in the earliest stage, and we do this risk taking. We have everything it takes to Europe to do it. And we have very good initiatives now, like Patrick Collison and all these guys from Stripe are trying to unify the startup ecosystem in Europe, which is really great, but we're a long way from that still.
Shame. I suppose one final question. You've just really concluded your journey to product market fit. You've got your first customers on board. They're all 6-figure customers. You're going great. If you were talking to a founder that was just setting out and had just taken their seed funding, and you could share just one piece of advice with them, what would you tell them?
It's a good question. You need to accept that the journey is going to be hard, and you need to keep moving. Action breeds momentum. It's a game of who can survive the longest. It's simple as that. If you survive the longest, then you'll make it.
But I think that tenacity is something that people don't talk enough about. Now, I've worked for 3 unicorns, and 2 of them came so close to going bust that they had to pay their staff in shares. But you never hear those stories. They get lost in the annals of time. So I think it reinforces your message on tenacity.
There's a reason you don't see founders very excited on social channels, even though very big deals go through everything, because, I experienced some of the things, but I can imagine, founders who are much more ahead of us, for example, or when they get through a stage, they're just relief. It's just relief you went through it and you just passed it, given all the problems and challenges you go through. It's very hard. And you see this every time. You see all the shiny things, but also investors like to romanticize the stories. When you look at the stories online or on LinkedIn about fundraising, and this company raised a Series A, this company raised a Series C, you ask the investor, they have a different story from the founder. The founder has a very different, less sexy story. And I think you have to go through it, right? Again, perseverance, tenacity. And I think this is the ultimate quality of a founder, is being able to weather stuff and keep going. I think for me, when you look at founders, even at the higher 50, 100 billion stage, they're going through the same pains, right? They just kept going at it for 15 years and stuff like that. And I think this is the ultimate quality of a founder.
I wish they would tell those stories more, because actually I find them more inspiring. One of my favorite founder stories is a founder on a small single engine aircraft having to hold the door shut because the latch was broken on his way to see a prospect in a far-flung country. And, when you realize that it is the reality, but it's actually so much more colorful than that kind of predestined for success. I don't buy that ever.
I agree with you. And I think I'll be one of the founders who will say it how it is at the right time. Yeah, because you need to say how it is. I think I'll be one of them at the right time if we make it. Because you're always trying to make it.
Joy, it's been brilliant talking to you. It's been fantastic to see MAST success. And I look forward to seeing where you go next.
Great. Thanks for having me.